Hi guys, thank you so much for joining me today. My name is Jason and today I'm going to talk a little bit about what a mutual fund is. The word mutual means a group of people coming together. The word funds means pooling of money. That means that the word mutual fund is a group of people putting their money together to buy a collection of stocks, bonds, cash, and other securities that are managed by professionals. People buy mutual funds because they want a simple way to invest in a diversified portfolio with the security of knowing that someone is managing and watching it to reduce risk while investing. How does it work? One guy who is doing very well can talk to a bunch of other people about how well he's doing. And maybe those people want to invest or have him advise in the stock market. He helps them and maybe he decides that he wants to start his own mutual fund to allow other people to invest into the funds that he's also managing. The guy can register with the authorities to get approvals and set up his very own mutual fund. The person can call it whatever he wants. For me, I would call it Jason's Big Money Fund because my name is Jason. Now, if the mutual funds has a high investment increase from, let's say, $1,000 to $11,000, people will be wanting to invest. Let's say 10 people invest $1,000. Those people are unit holders. This means that each person owns a share of the total amount of funds. This is called net average value. Now, with the investment cash, Jason's Big Money Fund is able to invest the money in whatever I decide. I could choose stocks and bonds, and typically I leave a little bit of money in cash just in case. Having the three together in one mutual fund makes it called assets under management. Since there is a guy managing the funds, he needs to be paid for his services. This is called assets under management fee. Let's say that 10 people invest $1,000 each, which leads to $10,000 and it grows to $11,000. This means each investor has an extra $100 if they were to decide to leave the mutual fund. There are banks mutual funds that allow anyone to invest into any mutual funds and that are traded on the stock exchange. But in my personal mutual fund, which I could set up, it's called a closed-end fund. A closed-end fund is a mutual fund that it allows other people to invest, and I get to decide how many people and who is in it. Let's say one of the people want to sell their portion of the fund. They would have to find someone else to trade their mutual fund with, their portion with. And with that, that other person joins into the group. So with my own closed-end mutual fund, I'm allowed to give 10 of my friends a part of my mutual fund. And they can decide to stay, they just can decide to leave, they can decide to give it to whoever they want, as long as someone wants to buy it. If not, it stays within the group. Besides this, that is pretty much what a mutual fund is, as well what a closed-end mutual fund is. I hope you liked my video. Thank you so much for watching, and I hope you learned a little bit about what a mutual fund is. I hope you have a great day, and I hope you watch my future videos. Thank you.